Apple has some major problems that we need to talk about and decide whether or not this stock is worth getting rid of. We'll talk about the price momentum of this stock. We'll talk about AI. We'll talk about tariffs and Trump and Tim Cook and much, much more in this video. So if you enjoy everything about stocks, make sure to subscribe. So Trump recently said in a post, "I have long ago informed Tim Cook, the CEO of Apple, that I will expect their iPhones that will be sold in the United States of America will be manufactured and built in the United States, specifically not India." And this is, of course, a reaction to Tim Cook and Apple seemingly moving their production from China to just other nations instead of the United States. Trump and the administration is very keen on getting manufacturing back in the United States, but this clearly did not make him happy. If that is not the case, Trump says a tariff of at least 25% must be paid by Apple to the US. And this is a big deal because this is the iconic product of capitalism, the iPhone, and Trump really wants it to be built in America. However, it is a publicly owned company, and this company can do what it would like, but clearly Trump and team are very adamant about getting the iPhone built specifically in the United States. And just how practical is that? If iPhones were made in the US, analysts like Dan Ives at Wedbush Securities estimate the price could increase significantly, potentially to $3,500 or more. This is due to factors like higher labor costs, infrastructure, and the complexity of building an entirely new supply chain in the US. Look, these other countries, places like India, places like China, Brazil, Vietnam, they have more of a manufacturing built upon economy. The US is a very services focused economy, as many other major kind of like the UK, the US, like these are very services oriented countries. And then there are countries that specialize in manufacturing. So bringing the iPhone here is a very expensive process that would not happen overnight. But whether you agree with Trump in this particular scenario that the iPhone needs to get made here or not, the point is this puts pressure on the stock. And while the rest of the market, specifically SPY, is almost back to its recent all-time highs, the Apple stock does not look so pretty. In fact, this stock looks a little bit rotten, if you will, because this Apple has not retaliated. That's horrible. But Apple stock looks a little bit rotten in comparison. You can see it's not anywhere near its all-time highs, and it would take a rally of almost 30%, 29% or so, just to get back to those previous all-time highs. Now, I've been cautious on Apple stock for a while for another reason that I'll get into in this video shortly, which is the AI side of things. But this new tariff drama adds in more to a picture that I already didn't love before this. Now, if we take a look at price momentum, clearly the downtrend in Apple has been pretty persistent. We've not really been able to massively take back gains from those April lows where many other stocks have. So we did rally pretty hard, 25% off of those, but now we're sitting at about 18% above those, all-time highs. Let's take a look at it as maybe an example of a one that has rallied much stronger. This is Microsoft. Microsoft's up 34% since those lows. And so when we look at Apple comparatively, which struggles on multiple fronts right now between the AI and the tariff stuff, I'm really cautious on this stock. Again, momentum here does seem to favor the downside, at least for the time being. And if anything flares up between the United States and with China or with the EU, anything that kind of stimulates the increased production costs of the iPhone or anything like that is very, very sensitive to this business model as it cuts directly into the margins of the profitability of these businesses. Here's a quick look at the income statement for Apple. And what we can see is, while yes, we have had some overall nice revenue growth, this company is priced very expensively, which I'll show you in just a second. But if we take a look at the net income and revenue, you can see overall we do have sort of a slow but steady overall growth to this company. I wouldn't say that earnings here for this company are dramatically rising very quickly as they had in the past in the early 2000s when the iPhone was kind of new and fresh. Every time a new model came out, there was something very exciting about it. Nowadays, it feels like the Apple products that are launching are sort of indistinguishable from the previous. I couldn't tell you very many differences between the latest iPhone and 3 generations back on the iPhone. Now, I'm not just hating for the sake of hating. I love their products. I think Apple is a remarkable company and they've clearly changed the world. But my concerns here are that looking forward on this company, I'm concerned about the lack of what feels like less innovation than the past. And I'm also concerned about the kind of geopolitical headwinds specifically focused on this stock. And you might say with all of this headwinds, you would think you could get Apple stock at a relative cheap valuation, right? But the price to earnings for Apple has steadily risen since the 2022 period. You can see this green line is just showing you the PE ratio on a trailing 12-month basis, which has risen over time, showing that this stock relative to its earnings has actually gotten more expensive. Not just the price of the stock per se, but the actual valuation of the stock relative to its earnings that it generates has gone up pretty substantially. And in a video I did yesterday about Uber, I talked about the opposite being true here. The PE ratio had actually gone down despite the stock price rising. This to me looks like a much more attractive company with a lot of growth ahead, a lot of innovation, a lot of new markets to tap into, as opposed to an Apple, for example. By the way, if you'd like to check out that video, I'll leave it pinned in the top right hand of your screen right now. And the product that I'm using to analyze this market data is the stock box. If you're interested in the stock box, there will be a link in the description down below to where you can get more information and a promo code there as well to get a discount on the product. If you have any questions, you can also speak directly to our support team on our website, a1trading.com. We build all sorts of different tools for traders. And if this one would be beneficial to you, I highly recommend contacting us and letting us know you're interested. We'll help you out, answer any questions you have. Is it just me, or these iPhones the same as every other iPhone model? Granted, let's be careful because of course this is a bit of a biased subreddit here, r/Apple sucks, but let's see if there's any sentiment that maybe you feel similarly to in this post. Is it just me, or are these new iPhones the same model as the iPhone XR? I don't even know what that is, just more advanced with different specs. And while there obviously is some differences between each model, the problem is that back in the day when we were all kids growing up looking at the iPhone, or some of us were kids, some of us were young adults, whatever, the thing here with Apple was that every time they dropped a new phone, it was like this amazing list of new features. And there is one thing that I think Apple could get right, but the problem is they're falling behind on it big time. Why Apple still hasn't cracked AI. Insiders say continued failure to get artificial intelligence right threatens everything from the iPhone's dominance to plans for robots and other futuristic products. I'm sure many of us are using the new chatbots that are out there, things like, of course, ChatGPT, Grok, Gemini. And what those things are able to do is pretty incredible in today's age. And I can't even imagine where those things are going to be in 5 to 10 years. But what really concerns me is that of all of the things that these chat robots and things can do so well already using the internet and things like that, my concern is, why is Apple so behind in that race? Think about how much Apple Intelligence, which is their variation of what they've been promising us for some time, what it could do if it was actually up to par. If you have an iPhone, I would encourage you to just play around with your Siri device and just ask it to do something like write down notes for me, or ask it some complex things, and you'll notice that it is really, really not very strong. So like, for example, if I asked it, find me grocery stores that might have fresh bread in them, like just a random example, it just can't do that sort of thing. Whereas if I asked ChatGPT to do that, it's going to do it easily. And so my concern with Apple is that if they lose kind of the utility, right? The whole idea of the Apple products being so remarkable is the convenience that they offer to their users. But if other things are just so far ahead of Apple, then it's a serious kind of threat to its existence. And with a PE ratio as high as it is currently, my concern is that this stock may not actually be on sale. Despite the stock price being down, I don't know that this is actually a huge discount. Now, let me be fully transparent with you. I actually bought some Apple shares during the April sell-off that we saw. But based on the things that I've shared with you here today, I am very concerned about being a shareholder for the longer term, as long as these things continue to kind of plague the Apple share price. Again, many other stocks have rebounded almost back to their all-time highs. When we take a look at other Mag 7 companies, like for example, we have Microsoft, we have Meta, right? These are other giant conglomerates that are doing quite well in recent times here. Amazon even has rebounded better than Apple for the most part, right? And then we take a look at like even Tesla. Tesla's like a monster in terms of its lows, but had dropped off much harder than the others. But my point is, you know, it's not getting the same kind of love and attention that the Nvidias of the world are getting, where buyers stepped in very aggressively on this stock. And that to me tells me on a relative strength basis some of the concerns around this company. They may not have the it factor, if you will, that they have in previous decades. And if you remember, well, some of you may have been trading. I was not trading during this time, but one of the most iconic stocks for this story is something like Cisco, which in the early 2000s was a dominant stock that people never ever thought would kind of lose its spunk. And sure enough, it did. So when I look at Apple today, which is one of the largest companies in the entire world, I think Nvidia is right up there chasing their tail or slightly ahead of them, one or the other. When we look at this company, the concern that I have is that, again, if the innovation and new products that have led them to be such an incredible stock in the last 2 decades or 3 decades or whatever, if that is slowing, that is a serious threat to their existence as the largest company in the world, which Cisco at one point was as well. And with so many great companies out there, my concern with Apple specifically is, why should I not buy something else with that money instead of buying Apple? And as an investor or a trader or somebody who's looking to put money into a particular stock, this is something you have to ask yourself. Is my money better served here or somewhere else? And for me personally, though I'm not a perma bear on Apple by any means, I've owned the stock many times over the last many years, this is currently a stock that I'm very concerned about. And I do want to just go on record as saying I was concerned about the stock over here. Obviously it melted higher, but I was concerned about the AI threat as far as back a few years ago. So I've not been very bullish or had a lot of share in Apple. I do have some at this time, but personally what I plan to do with my Apple shares is write covered calls against them and eventually get called away and just kind of let that go, right? So it was a nice trade, but it's something that right now I'm very uncertain about holding on to for the longer term, as opposed to the opportunity cost of taking that money and putting into something that I like much more. Like I said earlier, I shared a video in recent times about other stocks that I'm watching. Feel free to check those videos out if you'd like to.